What is going on, everyone, and welcome back to Explain the Charts. Today is November 5th, 2025, and we are diving deep into Ethereum, or ETHUSD, which has just experienced a brutal couple of days in the market. We're going to break down the latest news that seems to have triggered this crash, and then we'll jump into the charts to see what the technicals are telling us. As you can see on this daily chart, which shows the price action for over a year, the last two candles are massive red bars, indicating some serious selling pressure. So, let's start by figuring out what caused this. The headlines from the last 24 to 48 hours are painting a very clear and very bearish picture. CNBC and other outlets are reporting on a massive hack on an Ethereum-based DeFi protocol, Balancer, with losses estimated at over $100 million. This news broke just a day ago and seems to be the primary catalyst for the initial drop. Events like this really shake confidence in the DeFi space, which is a core part of Ethereum's value proposition. Following the hack, we saw a cascade of liquidations across the market, topping $1.1 billion according to the Economic Times. When prices drop suddenly, leveraged long positions are forced to sell, which adds even more downward pressure, creating a snowball effect. We've also seen reports of short positions surging as traders bet on further downside. Interestingly, this comes just days after a major options expiry event, where sentiment was already described as cautious, according to Crypto News. That article mentioned a downside risk to $3,500 if key levels didn't hold, and we've crashed right through that. However, it's not all doom and gloom. Cointelegraph reported just 13 hours ago that a major crypto whale, who correctly predicted the October crash, has just opened $55 million in new long positions on Bitcoin and Ethereum. This suggests that some of the biggest players in the market are viewing this dip as a major buying opportunity, not a reason to panic. So we have a classic battleground scenario, intense fear driven by a hack versus opportunistic buying from large investors. Now let's translate that news into what we're seeing on the charts. Let's zoom in on the daily chart, focusing on the last couple of months to get a clearer view of the key levels. From the August highs above $4,800, we saw a correction and then a period of consolidation, with the price finding strong support around the $4,000 to $4,200 area throughout late September and October. That support finally gave way a few weeks ago, but the price managed to find its footing around $3,800. That was the line in the sand for many traders. As we can see, the news of the hack on November 3rd sent the price plummeting. That day, we closed down nearly 8%, completely shattering the $3,800 support level. But the selling didn't stop there. Yesterday, on November 4th, the panic intensified, leading to an almost 9% drop and a daily low of just $3,055. This is a catastrophic breakdown in the short-term market structure. 2 consecutive daily candles of this magnitude wipe out weeks of gains and indicate that sellers are in complete control. The volume on these 2 days is also significantly higher than average, confirming the strength of this sell-off. To get a better sense of how this played out, let's switch to the 1-hour chart. Here we can see the waterfall event in slow motion. The price was trading relatively calmly around the $3,900 level before the news broke. Then, we see this series of relentless hourly red candles with almost no bounces in between. Each time the price tried to stabilize, a new wave of selling came in. The price sliced through the $3,800, $3,700, and $3,600 levels as if they weren't even there. This is a classic sign of liquidation cascades, where there are simply no buyers to absorb the immense selling pressure. Looking at the most recent hours, we saw the price bottom out around that $3,055 level before seeing a slight bounce. The price is currently trying to find its footing in the $3,200 to $3,300 range. This small consolidation is the first sign of the selling pressure easing, but it is far too early to call a bottom. Now, for the shortest time frame, let's look at the 15-minute chart to see the very latest price action from overnight. Here, we can see the bounce off the $3,055 low in more detail. The recovery was sharp initially, but it has started to look a bit weak as it approached the $3,300 level. We are seeing some sideways chop, which is actually a constructive sign after such a massive drop. A period of consolidation is needed to build a base before any potential move higher. Traders on this time frame will be watching to see if we can form a higher low. If the price dips again but stays above, say, $3,100, that would be a bullish short-term signal. Conversely, if we see a rejection here and a swift move back towards the lows, the bears are still firmly in charge. Okay, let's pull back to the daily chart to talk about the most important price levels going forward. The situation is precarious, but these levels will be our guide. First, immediate support is the low from yesterday at $3,055. This is now the most critical level to watch. Closely behind it is the major psychological level of $3,000. If we break below $3,000, the next major support zone from earlier this year is down in the $2,800 to $2,900 range, which we saw back in February. Below that, things could get much uglier, with potential targets near the March lows around $2,100, though that is a longer-term possibility. Now for resistance, the path back up is filled with roadblocks. The first area of resistance will be around $3,550 to $3,600, which was the breakdown area from November 3rd. If bulls can reclaim that, the next major test is the former support zone around $3,800. And finally, the psychological barrier at $4,000 will be a huge test of strength if we ever get back there. So, to recap, the market is in a state of fear after a major DeFi hack triggered a cascade of liquidations. Ethereum has crashed through multiple support levels, with the price now attempting to stabilize above the new critical support at $3,055. Key resistance levels to watch on any bounce are $3,600 and the more formidable $3,800 to $4,000 zone. Let's talk about some potential scenarios, keeping in mind that the market is extremely volatile right now. First, a bearish continuation seems quite likely. I'd give it a 50% chance. In this scenario, we fail to hold the current levels, break the $3,055 low, and head down to test the $2,800 support zone. This would be confirmed by more negative news or a failure to mount any significant bounce on good volume. Second, a period of consolidation, which I'll put at a 35% probability. Here, the price would chop sideways, likely between $3,100 and $3,600, as the market digests the news and finds a new equilibrium. This would be characterized by decreasing volume and volatility. Finally, a bullish V-shape recovery, which I see as the least likely at around 15%. This would involve a powerful, high-volume bounce that quickly reclaims the $3,600 level, trapping short sellers. The news of the whale buying the dip supports this possibility, but the technical damage is severe, making a quick recovery difficult. The key thing to watch will be how the price reacts to the $3,055 low on a retest. Does it hold and bounce, or does it slice through? That will likely tell us where we are headed in the immediate short term. Thanks for tuning in to Explain the Charts. We hope this analysis helps you navigate these chaotic market conditions. Before you go, please remember that this video is for informational purposes only and is not financial advice. The crypto market is extremely volatile, and you should always do your own research before making any investment decisions. Stay safe out there, and we'll see you in the next one.